Welcome back to Money Hack Japan. In today's video, we'll delve into some actionable insights on Japan's current economic landscape and how it impacts your investment strategies. As we explore these trends, picture this: a rainy day in Tokyo, the sound of raindrops creating a perfect ambience for focus. Grab your coffee and let's get started. First, let's take a look at Japan's GDP growth trajectory. As of October 2023, Japan's economy has shown resilience amidst global uncertainty, with a projected growth rate of about 1.5% for the fiscal year. This growth is primarily driven by robust consumer spending, government stimulus measures, and a rebound in exports. But don't just take these numbers at face value. Let's break it down. Consumer spending accounts for over 60% of Japan's GDP, and recent data indicates a significant uptick in retail sales, especially in the tech and automotive sectors. Companies like Toyota and Sony are not only recovering but are also innovating, with electric vehicles and AI technologies leading the charge. If you're considering investments in these sectors, now could be the time to evaluate their stock performance and market positioning. Next, let's shift our focus to inflation. Japan has battled with deflation for decades, but recent trends suggest that inflation is heating up. As of October 2023, inflation rates have hovered around 3%, influenced by rising energy prices and supply chain disruptions. This inflationary environment presents both risks and opportunities for investors. For instance, companies that can pass on increased costs to consumers are likely to maintain their profit margins. Consider looking into consumer staples and utilities, which historically perform well during inflationary periods. On the flip side, be cautious with sectors heavily reliant on fixed contracts, as they may struggle to maintain profitability in this environment. Now, let's touch on the Bank of Japan's BOJ monetary policy. In an effort to combat inflation, the BOJ has indicated a gradual shift in its ultra-loose monetary policy. As of now, interest rates remain low, but there are whispers of rate hikes in the near future. This potential shift could impact the bond market significantly. If you're holding Japanese government bonds, it might be wise to assess the duration risk in your portfolio. Conversely, if you're looking for yield, consider exploring corporate bonds, which may offer better returns as the market adjusts. Moving on to the foreign exchange market, the yen has been experiencing volatility against major currencies like the US dollar. As of April 2026, the yen is trading around 140 yen to the dollar, a significant depreciation compared to previous years. This presents a unique opportunity for exporters, but it also poses challenges for importers facing higher costs. For investors, currency fluctuations can impact multinational corporations' earnings. Keeping an eye on currency trends can help you make informed decisions about which stocks to buy or sell. Next, let's highlight the growing trend of ESG, environmental, social, and governance investing in Japan. There's been a notable increase in demand for sustainable investments, with more companies committing to carbon neutrality and social responsibility. If you're passionate about sustainable investing, consider looking into Japanese firms leading the charge in renewable energy and sustainable practices. Not only could this align with your values, but these companies may also offer robust growth prospects as the global economy shifts towards sustainability. Finally, let's discuss the real estate market. Tokyo's real estate has shown resilience with a slight increase in property values, driven by low interest rates and a recovering economy. However, it's essential to differentiate between residential and commercial properties. While residential areas are seeing steady demand, commercial spaces are still grappling with the aftermath of